Good evening, everyone. My name is Paul Young. I'm just going to walk you through the key industry and market trends for February 2016. Now, part of this presentation is going to have January numbers as well as February because we have indicators that are laggers that typically happen a couple months later before we actually see the data for a particular month. Now, my presentation is only one opinion of the business trends. You're more apt to go out to bank sites or anywhere other source to get a difference of opinion on the economy or what's going on in the markets. Quick brief bio about me. I'm a CPA CGA by trade, so I've got 25 years of experience. Now I'll be looking at all aspects, the major aspects of the economy, from supply chains, automotive, steel production, ag, retail sales, employment, housing starts, power generation. So if you look at this particular chart, I've looked at the oil rigs here. So if you look at oil prices in general, like in 2014, we were up to about $68 a barrel. We're now half of that, and we're still hovering around the $30 range, and we've been around that range for a while now, for the last couple months. So there's no indication that the oil market has bottomed out yet, and you're seeing that indication too in terms of the oil rig production, which shows you the capacity to produce oil, especially in North America, and you're seeing that. The bottom part of the chart you're seeing is a couple things where it's showing you the refineries are at about 92% capacity in the US since December. So they're still pumping oil, but they're nowhere near at 100% yet a capacity. The other thing I wanted to bring in is that there was some discussions with OPEC basically saying that they were going to cut production. Well, OPEC has changed their minds. Now they're increasing production there. I brought the mining sector in, okay, because the mining sector itself, the key areas like nickel, copper, and aluminum, if you look as little as back into 2012, we were at $3.61, almost $8.91 a barrel for those materials. We're almost big, especially with nickel, we're half of where we were. We're about 40% down on copper, and we're about 20% down on aluminum. So the commodity prices have still taken some of that shock, and that's had an impact along with oil on the Canadian dollar. We're seeing that. But I've also showed you here a couple key comments here about what's happening here in terms of production. Certain projects like the Baffin Islands project in iron ore is still going ahead of schedule. Key metals to watch, or minerals to watch, are lithium, vanadium, and diamonds. They seem to be doing quite well right now, and there are areas to keep a focus on. Canadian manufacturing sales had a phenomenal month, but most of that was driven by transportation, as you see with that particular chart. But you're also seeing food manufacturing, forestry as well. Trade exports, again, we've basically had a phenomenal January compared to the previous months and compared to where we were in January 2015. And that's what you're seeing here on the right hand side, and seeing where most of the exports in the 9 and 11 sectors have shown advances, and that's another good thing of the economy. Class 8 trucks, we don't manufacture anything up here. We might do some little bit of trailer work here in Canada. We may do some maintenance work here. But what I wanted to show you here is Class 8 trucks have had a phenomenal growth the past couple years, supported by a stronger economy in the US, but also showing you where you're seeing freight and distribution going up to support a stronger, healthy economy. And that's what you're seeing in the right hand side with US retail sales. Yes, they dropped in February, but they've been very solid for the past few years. Automotive. Now this drives retail sales, especially in Canada, where it's been taking over, and one of the main indicators that retail sales have gone up. And that's what you're showing here in terms of this graph and chart, is showing you that we are likely going to hit in 2016 automotive production about 18 million units. We haven't seen those levels since the mid 2000s. Steel production, I wanted to give you a good example what's going up on here. A couple different things coming into play. We've got considerable pressure of capacity worldwide, especially in China, where China's cutting back there. We've also seen issues in Canada where China, shouldn't say it's Canada, but in the world where China has been dumping steel. in this particular case is pipe products. Pipe products are critical here because they go into pipelines, they could go into sewers and stuff like that, and that's area that's part of the infrastructure spending as well as pipelines. It's something to watch and play that the government is basically looking at how dumping of steel products in, especially from countries like China, are coming into play, and that's what I wanted you to take out there. The other thing is I wanted to show you with metal processing centers too as well, because they take the steel and they recut it down and use it for other processes. And basically what you're seeing here is it rebounded in in February 2016 as well as January. We've seen two straight months of solid gains. Ag equipment, we make a little bit of ag equipment here, but the trend I want to show you is the agricultural sector itself in Canada has done quite well. Typically they don't make a lot of purchases in January and February, but most of the cases they are starting to get them in the springtime as they get ready and geared up for their production cycle. And I also want to show you here in terms of a government program that was just put in play to help small farmers or young farmers get started, as a program to get them because they need equipment, and that's why I showed you that linked as well. Employment, we've had solid gains in employment, and it's still showing the gains in February, and I wanted to show you a little bit of what's happening in key areas. And it makes sense that you see British Columbia and Ontario doing well because the economy has picked up there to support the export aspect of the economy, and that's what you're seeing there as well. Housing starts is another key indicator of the economy, and it's still pretty relatively strong both US and Canada. That leads me back to this chart here. If we look at forestry, forestry is another area that we've seen solid growth on both on the residential side. That's where the housing starts come in. So that supports the lumber, and also supports the lumber exports going to the US, and that's where this comes into play with the housing starts. Retail sales, we've still had solid the last 2 months of retail sales. This is a good indicator of the economy. I wanted to show you this in a roundabout way where we're seeing uptick in retail spending, because retail spending accounts for 2/3 of GDP, and it's something that you need to watch as part of the overall health of an economy. I just put power generation here just to give you a good example where the bulk of the power generation is. Only 2% of power on average is generated from wind, solar. So as much as you hear all the rhetoric about it, it's only about 2% of the power. Most of the power generation loads are still between hydro, nuclear, and combustible fuels. To replace combustible fuels and to bring that online is going to take a lot of investment, and we've already seen some issues with wind, solar, and geothermal, or even biomass plants, so it's something to watch into play. The second point is, in the federal budget, there is new money planned for what they call as green infrastructure. So it's money that is supposed to be going into wind, solar, clean energy technology. So it's part of relooking at more money to support a carbon-free Canada. So it's something to bear in mind. Now this presentation highlighted the key areas. Now I did an earlier presentation, you're more apt to go look at it. It's on GDP. It shows you that Canada had a phenomenal January for GDP. We're in a market that's not stable. So even though when you look at trends 1 or 2 months out, you have to still take things with a grain of salt. And the reason why I say that is because in general, we've got a lot of pressure points in Canada based on both what's happening in the US market as well as the global markets. We also have geopolitical influences of what's happening in the Middle East or anything else that's happening in Europe. That's going to drive some of the issues with the economy. Now, one of the things you need to bear in mind is the federal government's new budget they just brought in or tabled the last few weeks will start having some impact on the economy as that money gets out into the circulation in terms of the programs. Now, bear in mind, we're not in a recession. So what this government has chose to do as part of this is stimulate the economy by putting money out there to circulate it. The concern that people have, and most economists will tell you, is you have to be very, very careful of what you put money into an economy, especially what we call as Keynesian economics, to support it. You need to be tactical with those investments. So time will tell whether or not the government of Canada got it right in terms of its funding and how it's helped us support the economy. That's one thing you'll have to figure out. The point I want to make here is there's other factors going in. We may not see the momentum of retail sales in the first 2 months carry on into the remaining part of the year. We may see it stabilize around 2%. We may see housing starts come down a little bit as mortgage rules change a little bit, as more people get apt into that. So these are things to be watchful as you look out in terms of making decisions in your life. Thank you.